And officially, good morning. Welcome to Options Income Launchpad, Wednesday Market Midpoint. I'm Scott. As always, educational and illustrative purposes only. No recommendations for any products. We're not brokers or advisors. Don't give personalized investment advice. Decisions are at your own risk. Read it at your leisure. Today's opening is what we're going to look at. Check in on our posture, mindset for open trades. We have a few. Opportunity list looks strong. Definite setups. I thought about doing one in advance, but then I was like, you know what? If we're going to do it, let's do it together. So I have a blank template ready to go. Dun, dun, dun. I know you thought it was some fancy template. Nope, just an Excel template ready to go. Let's get into it. So let's just start here. S&P up 25.25, Dow 0.16, NASDAQ 0.58, Russell 0.26. Nice solid numbers. Starbucks jumps as U.S. sales rise for the first time in 2 years. Ooh, someone mentioned this one last night, though I looked into it. It's really only like 1%. They employ like 1.6 to 1.8 million people. Amazon. 1.1 in the States. So 16,000 jobs. Apparently there's kind of a little wave of mid-management trimming going on. So I don't know if that's any representation of broader things to come. Fed set to hold rates as tension grips Powell's final. I gotta say, I think Powell was among the top. He's very near and dear to Greenspan for me. I much prefer him over Yellen or Bernanke. I think Bernanke was my least favorite. If we're just discussing our preferences in Feds. Oil hits 4-month high. Dollar sinks to 4-year low. Let's just wait. Okay. That's about it. I don't see much going on. A few anecdotal headlines. Any news anyone feels like I'm missing? I don't know what's going on with that Yahoo. Everything in here is working slowly. Well, we know what the economic calendar is today. Today's economic calendar is the Fed. No expectation for a cut. The curiosity, and I wouldn't expect either A, much change in the language, or B, what was B? I lost my train of thought. A, much change in the language, or B, much response to the... I don't think there's going to be much of a response. If you've watched some of them recently, there's been some chopping around. I bet today is a pretty mid-level reaction. That's my thought. U.S. dollar falling is good according to Trump. Yeah. I mean, it has the potential for positive. We talked a little bit about that. last night in our session. We talked a little bit about how, it can make goods cheaper to buy, so there's more exporting and more money is made for multinationals on their outside the U.S. profits as they bring it, so there's some advantages, but one of the core reasons that it would be problematic is if it's due to perceived bad U.S. policy. I don't know. We'll see what happens. It has a potentially okay impact for the stock market, generally speaking. Yeah, Gabe, that's a good point. Does it fall and stay, or does it rebound? Okay. Let's go. I've had this weird issue, and I'm almost afraid to look. How can I look at the VIX? I'll just have to type it in. If I just type it in, it should be fine. Let's try that. When I click on it from the watch list, okay, that works. So the VIX is still in an uncertain spot. I think this is an interesting place right here, because I think that's definitely a low as we've turned up. And so from here, if we go up, and let's even say there's like a doji and then we crank down out of it. Breaking out of that is also making this a lower high, which would be very significant and bullish for us. That, of course, would actually be a filled-in candle. Yes, like that. However, right now, it kind of feels like if it turns up here, let's say it takes this out, then this is definitely a higher low. And I would be very concerned. So I would say my concern is around 17 to 1740, like 1750, right? At the latest 1750, starting more at 17. If we break 17, could be problematic. Now, if it does it in the first couple hours of a day, I would say it has an ability to come back down, but if it's late in the day, then it's pretty concerning. Today is fine. The market is up again. It's 0.22 or 0.27. We know the volume for the last 3 days has been less than average, but the market continues to push. And there it is. So this thing is pushing new highs today. Let's check on the other markets. Here's QQQ. The Q's looking back in business here to some extent. Quick check in here. Boom. Continuing to stay on this. Those with NVIDIA patience. I don't even know if it's patience per se, because it wasn't like I got impatient. My plan said if it closed at a certain point at a certain, day, I close it off. That's a lot of the times that I've held was because we didn't break support. But if you did hold, you got paid for your ability to handle some risk. It's looking like its best day yet. All right. Very nice. Let's keep looking. What else do we have through here? That's important to us. Ford pausing after yesterday. Come on, Ford. Just come on. What are you doing? Let's see. What else do we have? City up a little bit. Still looking to see if it's going to catch that pop out. That's what I'm looking for. And let's look at the Dow. Dow is kind of just flat. And the Russell is up just a little bit. Not much. Not very much. Okay. Alcoa, starting at the top. Not yet. Apple. And you can see it got like a little pre-earnings bump. Now it's sort of settling. Earnings are going to determine what comes next. We're going to just be spectators on that one. ADM just keeps on going higher. So we started to watch it to see, like right through here, we were like, can it give us a chance? And it just sort of, didn't. Earnings are not far away. I just don't think there's going to be one that develops here. And if not, I'll probably chuck it. Applied Materials. Oh, okay, so we were looking at that one yesterday. Still moving, so that one's maybe a little past where we want to get in. AMKR, meh. Amazon, still moving. Who has, anyone have some of the Amazon? Let me know. APH. Whew. So APH had this pre-earnings bump. Earnings did meet expectations. They were asking for 92. They got 97. Market beat expectations. So what is it? The but. But going forward, something, headwinds, a drop in sales somewhere, a decline in something, and that's the reaction. ASX is up still. That one was interesting. Flat on Bank of America. BABA, chopping around. AXP, American Express, Bank of America. I was seeing the BAC symbol coming up. AXP is flat. But Bank of America is also flat. So there you go. BCS, Barclays, little pullback. Bud. Overextended. I don't know. That was one we were looking to see if it would give a pullback as well. Let's see. Citi. Still waiting. Caterpillar. Earnings are tomorrow before market. So this one looks poised. I could see it move. CF, same thing. Never really gave us that little pullback we would be looking for. Coherent. Coherent is, yeah, same kind of a thing, right? It just was very choppy through here. A little overextended here. Cisco was moving today. A little pause. Just a pause though. Delta still dropping. I had a few that I was like, these are standing out. And maybe we haven't got to them. I can't remember which ones they were. The Dow Chemicals earnings are tomorrow. I don't know. We may not watch this one much longer. It's kind of a boring stock. Estee Lauder could give a pre-earnings trade 3-4 days. We'll see. Ford, we already said. A little pause. GE. Gold still higher, another 2%. Man, it's interesting to watch that run. GM pausing after its earnings jump. Google flat, earnings getting closer. Goldman was one we talked about. Citi, nice, Peter. I think that's a good one. I think Goldman looks good. Goldman and Morgan both look good. It's just kind of sitting here. These are leaders. It's good, strong. We'll look at the Morgan in a second. Home Depot could be flagging here. What I'm looking for is what's tradable today. Silver's or HL on a little pullback. Could make another bounce if silver stays strong. Intel bounced. Pretty favorable sign. It bounced. It's kind of back into its pre-earnings range. Not sure it looks tradable though. IVZ had its earnings. Initially gapped up. Sold off the rest of the day. Starting to hold now. Maybe an opportunity there. No. Lumentum. Lam Research. MasterCard. Meta. They're reporting today. Aftermarket. Who had some Meta, and are you holding through earnings or are you closing down? I have to imagine you are probably going to close. I mean, it could absolutely. You can see the last earnings, it gapped from 750 to 670. Pretty big. Okay, so what's your thought? Close today before earnings or hold? Could go. Could plan on holding. All right. Best of luck, sir. Monster looks close. Don's in Meta too. Okay. So a couple of you guys maybe going to be watching closely this afternoon. Doug said earnings should be good, but remember it's a combination of earnings and guidance. And the market's fickle and is very much, what have you done for me lately? So if they come and they're like, for example, here. No, here they missed hugely. Okay, never mind. Here they were expecting 606 and they got 105. So that was a big miss and they dropped and then further dropped. Here they're looking for 821. Even if they came out and said, we got 850, 870, $9. Those are all beating expectations, good earnings. And then they said, but we see the competition in the AI market driving employment costs up. So our projected AI, blah, 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 20% higher. As soon as they say but, everyone's like, oh, shit. Right? So, yeah, they could have good earnings. Hopefully they have both good earnings and good guidance. Monster looks good. Ah, there you go. Love that. You know I'm a fan of that strategy. Has two, selling one. Lock it in. I'll carry a contract or two through earnings sometimes. For sure. 100%. Why not? Monster looking for a pullback entry here for sure. It's a strong stock, good consumer discretionary stock. Morgan Stanley, I was looking at. It's actually, I would maybe even say, still a viable thought here. Let's take a look. Even on this, maybe not. Maybe I'd want to wait for one more candle, but I'm thinking about it. I feel like there was more developed yesterday. I know the R's are looking good. I've got a half an hour. By the time I get to the R's, I'll have a half an hour. So I'm feeling pretty good about that. Microsoft. I would love to see both Microsoft, Apple, Meta. I'd love to see those guys have some good earnings. The market's building up to it. Buy the rumor, sell the news. Hopefully not. Micron, still going. It's the Energizer Bunny. It's a freight train. Still going. Netflix. Also still going. Down. New. That was a good one right there for sure. So new. A lot of times I'm like, oh, let's watch these for a little bit. I've got to be a little bit more like, hey, as long as it has the liquidity, which this one does. This one has tens of thousands of contracts at its dollar increments. Yeah. I'm going to think about that. Be a little bit more. Of course, now our watch list is pretty strong. We already talked about NVIDIA, Palantir, still in consolidation, earnings soon. NASDAQ looking good. And the R's. The real. Rocket Lab. Oh, Rocket Lab is looking actually quite tasty. Okay, now that should also have a Heiken-Ashi. I think this is the one we're going to play with here. Let's just look around and come back to this. Rocket, not yet. It's close though. Ross, close. RTX just had earnings. We're gonna have to watch this one. Sorry, I left it in the wrong candle. Rocket, close. Ross, close. RTX, no. Silver, up again. SanDisk, strong, right about earnings now. Here's the SPY. STX is flying. After its earnings report, they're like, we just made a bunch of money. Cisco, okay. I mean, it's had this huge move on earnings. We gotta just watch that one now. TJX is still dropping, so Ross Stores continues to establish itself as the better. There's Tesla. No. Taiwan was one on that I was like, I was thinking about putting that one out. I didn't. My bad. Vail, Viking, VIX is kind of flat. I'm not pulling it up right now. VOD overextended. WDC overextended. Earnings soon. Walmart possibly still in a setup. We were patient back here. Look how similar this looks to this. We were patient. It's stabilized. We got the trade. And then we were patient. And we got paid. So no rush. Let's go look at Rocket Lab together. Yeah. Okay. I would say the stop could be anywhere between around like 81 to 82, maybe right in here, 82.50. 6 points. Let's go with that. Let's go with that. RKLB is a bullish. We're going to build it together, and then I'm going to put it out as soon as we are done here. So being live has its privileges. Okay. Entry range, we're going to say anywhere above this 87 to 88.75, 89, 87 to 89-ish. I mean, here's the thing, just for I mean, it's not like if it was like, if I say 87 to 89 and it's at 89.25, you're like, nope, you can't do it. No, of course not. These are just like, generic ranges. Stops, I said 82.50. That could be as conservative as down here around can't see that low. Oh, come on. What's today's low? Oh no, that's not what I wanted. This low. 80. So we'll say 79.75. Okay, let's see. 79.75. Primary target. $107.75. 107.75. Potential take profit. Yeah, I'd probably say 100. Even though it only got to 99.50, it's about 2/3 the way up. I don't know, maybe 99. Yeah, 99's fine. Let's go 99. Time and trade. That's 2.5. I'd probably say, yeah, 7 to 10 days is pretty normal, pretty standard for this. That fits. Okay, let's see what we have. Any questions about this? Let's run some numbers here. We had a great trade on Rocket Labs not long ago. Fabulous trade. So we're getting basically $20 and change from 87, 85 or 90, whatever, to 107.75. So there's about 20 points there, and And we have about 550 to the downside. 20 divided by 550. 3.63. Whoops. Okay. Ooh, Don said that the spread's looking a little off. We had okay spreads on the last trade. Did we not? February's has thousands. Okay, yeah, that's because it's got dollar increments. That's the 90. In this case, I'd probably be looking at I'm going to go to all strikes. I'm probably looking at the volatility is pretty mid to high, actually. Mid to high. Let's see. Why can't I? Oh, there we go. Okay. Yeah. I mean, I might even look at the 105s. Let's play with this a little bit. Let me bring this up here. This is for Rocket Labs. And I still have time. I went to the all so I could come down here and see what else there was. And you can see it's at the 95 2100 contracts, at the 100 3400, at the 105 1200. It's about 20 cent spread there, 30 cent there. It's not the best, but it's also in range. So if I do this, and let's go 107.75 here. Let's go 82.50 here. And where am I? Okay, yeah, that's probably far enough out. A week out to be wrong. Well, maybe I'll go to okay, that's fine. So you can see I'm still getting better than 3 to 1, even on the option. But it's risking about 220, we'll call it. It's a pretty good chunk out of the $3. It's risking a good chunk of it. 70%. Or we vertical and we say we do a 95 by 100. And it's about the same, 3 to 1. You do become time positive over here. So if you caught something, I don't know. This is an interesting differential. You're losing most of it. And here you have... Doug said he got in and it's already moving a little bit. All right. 2.5. Now, if you stayed, a lot of times if we go to, let's see, 2.5 is wrong. If I'm right, let's say it goes to 2.10. At 2.10, now I'm making, well, let's get these standardized first. Let's start at 2.5. If I'm wrong, let's do a $300 position size. I don't even think I can. I can do 220 here. We'll do 400 and 440 here, and then here we'll do the same. 477 or 410. And we'll go with this one, a little under it. 440 to make 1,300. 410 to make 1,100. Now, they're both around the low fours, okay? But if we go further out in time, because it takes longer to be right, a bull put spread 85, 70. I mean, anything like that could work. Let me show you what that would look like if you're looking at it at the frame that we're looking at. So let's go an extra week out to the 12th. You'll notice here, if I go to the 12th, I'm only making $880 now. Right? Remember, we were risking 400. So if it takes all the way until the 12th to get to 107.75, I'm only going to get 2 to 1. That time is going to chew me up, $68 a day. But that next week, so from the 5th to the 12th, here, if it gets to my target, I'm making 1,300. 1,300. So I'm actually still at 3 to 1 and maybe even improving a little bit because my theta is now positive by 40. So that's the difference between those. Is the high volatility doesn't give you a lot of time for this thing. If it is a trade that needs a little patience, the bull put spread gives you a better opportunity to mitigate that. They're fairly close at the beginning. Minus 29 here, minus 32 there. So in the beginning, they're both losing about the same amount. But if it makes the move it's supposed to, and it takes 2 weeks instead of 10 days, that's when you'll see one kick in. Let's do one more. What if? Let's say an 85.75 bull put spread. Let's go see the risk profile. And let's go back to the 5th. You can see this one stacks up pretty well. It's pretty good as well. You can see 1,000 to 28. So not quite 3 to 1, 2.8 to 1. It's still right there. But if it got to the 12th, that one actually kicks into gear. It's got a lot better positive time decay. Yeah, well, I could, if I adjust it down, I would do 4 of these. And then we're back in that 430 range, right? So It's pretty close. You'll have, and then again, as time ticks on, it helps you more. You have a better positive theta across the board. In fact, all of these, the longer you're in the trade, the better the trade is. It's not a bad idea. It's a bigger margin requirement. You're looking at $1,000, so you would collect a premium of $350. Right? You would if you did one contract, you would collect a premium of $350, and then they would hold, let me move this to one contract, $1,000. Right? So you put $350 into your account on day one. Here's $350. Some people are like, I love bull put spreads because they pay me on the first day. Well, the problem is that money goes into an escrow account per se. Your margin account is in this situation. A lot of times people are like, oh, I don't want a margin account. What do you mean? Of course you do. A margin account functions as a sort of escrow for these types of trades. The broker doesn't just give you the money and let you walk away. Of course, the trade has to still happen and work. And so they'll take that $350 and then they'll take $650 of your money and set it aside in that escrow account. It's pulled out of your buying power. So when it says BP effect minus 1,000, it's taking 1,000 of your buying power, but 350 of it comes from the credit itself, right? So 350 in margin, 650 in margin, with the ability to risk about 107 to make 289. And then if the time continues, everything gets better. So the longer you're in this trade, the better it is. You'd only lose $67 by the time it got to the 14th. What was the starting amount of that? I needed 4 of those, right? 4 of those. The other thing is this: when I do the bull puts, when I do the naked put or the bull put spread, and I'm looking at like, hey, if we're not wrong until then, it's only this because time's better there. If we're wrong earlier in the trade, like if we're wrong on Friday, we actually lose closer to 500. So this one has more risk in the first few days because the time hasn't helped yet. Okay. So here's what I'm going to do. I'm going to surprise you with the trade alert. So you get to pick based on what you're watching here. You can pick. Now, PJ says, what if we narrow it? And instead of let's sacrifice some credit. Instead of buying the 75, we buy the 80. It also lowers our buying power. Instead of 1,000 of margin, it's only 500 of margin per contract. So now I get $2 in credit for 500. You can see now that I've narrowed this, I can do more of them. So I could be like, so if I do, let's do 6, right around 400 like the other one. I am tying up $3,000, of which $1,200 comes from there. So $1,800 of my own money. $1,800 of my own money. Over here, it's $600. Or it's $750, right? So both of these are easier on the buying power. They all have about the same level of risk. Okay, so let's see here. I got to tell you, this one I actually like quite a lot, PJ. You're right at the edge of this here where it's like time's not working against you. It's not working for you. You're just pretty theta neutral out here at your stop. So whatever your stop is, that's what it's going to be, most likely. Again, this is theoretical, but these numbers, as long as the math holds, the analysis seems, or as long as the actual numbers hold. Although, let me tell you this one has the best, like, you're not losing worse, time doesn't go against you, time helps you throughout the trade. So now if I go to the 5th, you'll notice my loss is the same. If I go to the 12th, my loss is actually slightly better, slightly theta positive. If I go to the 5th, now I'm making $950. And if I go to the 12th, now I'm almost making $1,200. So I'm not getting the same reward to risk ratio, which is okay, because I'm getting better probabilities of success. If it moves slowly, if it goes up and comes back down, stays where it is, the longer it doesn't go wrong, the better off this trade is. So you have a little bit of sacrifice because it's just not going to produce the same as the others in order to get a different theta profile. So you can see, tell me if this is interesting to go through with a live trade like this. I don't want to be like everyone's bored and like, just go find a trade. I'll be like, okay, I'll try. Theta right there. You'll see even at the beginning of this. Yeah, let's go back to today. 4, 12, 20. All positive. So every one of these, no matter what, benefits from time. The longer we're in this, the better all of this becomes. So even though this is the lowest reward to risk ratio from the beginning of the trade, this one continues to get better and better and better. The others continue to get worse. Well, not all of them. We'll walk through. The debit spread gets better if it's out in your target area, but worse if it stays flat, right? And if it drops. So here you'll notice that starting in this area to here, these are our focal points. This black line is above, well above, above. What does that mean? Over here, it's below. It means that this gets pulled down. This gets pulled up. That's kind of the impact time has. Whenever you're looking at a chart like this, a risk profile chart where you have, these two different lines, they're eventually going to be the same. What's going to move them there? Boom. Now, if you notice, time is advancing. I'm moving this. Now we're at the 5th. Now we're at the 12th. And you can see what's happening is one's getting pulled up and one's getting pulled down around this pivot point. And that pivot point just happens to be where our stop is. Boom, 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 boom. Yes. Okay. This one's interesting. The pawn is reward to risk. You're not as high. The benefit, the bigger picture gain, is probability. and positive time decay across the trade. In the same vein, if we narrow it to 85, 86, why not 80? Why not 80? Let's see, we're at 84, 80. Okay, 85, 86. Let's say 84, 85. Some people love dollar-wide spreads. This is the one kind I would like right here. I like this. You're still under $100 of risk a contract, so it makes it pretty easy for position sizing, you know. 84. Oh, they don't have 84s? Is that why you said 85, 86? Do they have 86s? Ah, okay. I'm only showing, okay, 47. So you'll notice now here at your stop, you're on this outside. It's not a lot, but it is negative time decay. I mean, you could make this work for sure. But for me personally, I think this is the kind of trade that I prefer. Yeah, something like that. Something like that. Okay. What other questions? So, keep it simple. You buy a call. You might think, whoa, Scott, this one's 300 for 16. No. We got to go out at least a week for being wrong. And now we're at 440 to make 13. And the longer we go, that 13, you can see, look at the gap here. There's a big pull. That gravity pull is from theta. The theta gets worse as we go higher. So that's the biggest concern with buying that option, is that there's not a lot of cushion. There's not a lot of cushion. So if we end up doing here, you'll notice this part is back in this area. So it kind of behaves like you were buying the option back here. And then if it gets to the targets, like 99 was our first target, then it gets over here. And now it's behaving more like that bull put spread, where time is now working for you, right? You can see where that the switch of this trade is the hinge for time decay got moved out here to 97. The hinge for time decay on that bull put spread we did was down here at 82.50, right? If I go switch these two, you can see there's the hinge over there. So all three of these are just kind of slightly different with what you would be looking for. If you're asking me what I'm leaning towards, one of the spreads. One of the spreads. PJ, I got 209. Bottom line, 185.80 and 185.75. Okay. One of each. I like the credit spreads. I think that was a great idea. I like PJ's idea to move around. I like what we're doing here. Thinking outside the box. I believe last time I did Rocket Lab, I did a bull call spread actually. But a number of people bought the option. Does that sound familiar? Who participated in that? Yes, Craig said. That's what happened, isn't it? I think I remember now. Craig bought the, okay, you're one of them. You bought the option and it made a big move, big win. Both did. But I think on a big win like that, the long option will outperform, right? The bigger it goes. Find more of those. Well, I'll try. um, okay. Yeah, I'm going to put an alert out on this, one of these spreads probably, but you've got all the logistics of it for if you want to go ahead and move forward. But look for that here in the next little bit. It's good to see everybody. Have a great rest of your day. As always, happy trading.